Hello everyone, welcome to my YouTube channel. So in this video we are going to learn about business trust. So business trust is one of the most important topics and a little bit tricky as well. So definitely ICI will test students from this topic either in subjective or from an MCQ. Either they can give you 2 marks question or directly an 8 marks question. So whenever any question comes from this, we should be ready and make sure that you get full marks. So let's get started. So first of all, in business trust, there are three parties involved. First one is unit holders, and then business trust, and then SPVs. So unit holders will go and invest in business trust, and business trust will go and invest in SPVs. Okay, so if the investment is done in equity, you get dividend. If the investment is done as a loan or debt, then you get interest. Okay, or else if the business trust goes and invests in real estate, there you get rent. Okay, so now we have discussed about three kinds of income, that is interest, dividend, and rent. All these three incomes are exempt in the hands of business trust, and they're taxable here in the hands of unit holders. Okay, whenever business trust is receiving from real estate or SPV, whenever it is receiving from them, so in that case, business trust, it is not liable to pay tax since it is exempt. But the same amount when it is distributing to unit holders are liable to pay tax. Now, when the unit holders are liable to pay tax, business trust needs to deduct TDS. Okay, so so now here you need to understand is that unit holders are can be residents and also can be non-residents. So for residents the tax rates is different, and for non-residents the tax rates is different. Okay, so there are three parties, three kinds of incomes. There's a resident, there's a non-resident. Okay, so all these three incomes are exempt in the hands of business trust. It will be taxable in the hands of unit holders. Okay, so let's talk about the TDS rates. So I've given it in the form of a chart, which would be very much helpful to remember. So when it comes to TDS, so here whenever business trust is distributing the income to unit holders, it has to deduct TDS. Okay, let's talk about the residents first. Okay, in case of a residence, it's a flat rate. Either it is interest, it's 10%, it is dividend, it is 10%, it is rent, it is 10%. Okay, it has to deduct TDS 10% and then distribute the amount to the unit holders in case of residents. Okay, now what is the ultimate taxable in the hands of unit holders? Now he has received, now a resident has received the rental income. At the end of the year, it would be chargeable to tax as per normal tax rates. Okay, as per slab rates, whatever slab rates are applicable to that individual, it would be chargeable to tax as per normal tax rates. Okay, here this is very easy to remember in case of residence. First is TDS is 10% in all the three cases, and then ultimately in the hands of unit holders it is chargeable as per normal tax rates. Okay, let's take an example. Now let's see in case of a non-resident. Okay, in case of a non-resident, one idea is you have to remember the sequence. First is interest, then is dividend, and then the third one is rent. This is first, this is second, this is third. Okay, so in case of non-resident, 5% it is in case of interest. In case of dividend it is 10%. In case of rent it is rent rate in force. Okay, normally as of now it is 30%. Since it is a non-resident, even surcharge will also be included, so 30 plus 4%. Okay, so remember the sequence like this: interest, dividend, and rent. It keeps increasing 5%, 10%, and 30%. So this is the TDS part. Okay, and then ultimately in the hands of unit holders, what is the tax rate? For non-resident it is 5%. Whatever TDS is deducted, that is ultimate tax for non-resident in case of interest. Okay, in case of dividend it is 10%. Here also it is 10%. And then when it comes to rent, he has to pay as per normal tax rates, but TDS will be deducted there at 30%. Okay, I'm sure this must be clear. If not, I will repeat it once again. So unit holders are of two types: residents and non-residents. So for residents the tax rates are different, for non-residents the tax rates are different. So since it is taxable in the hands of unit holders, business trust is liable to deduct TDS. Okay, now at what rate it will deduct TDS? In case of interest, so let's talk about residents since it is easy. For residents, TDS is flat in all the three incomes. It is 10%. See if you can, here it is. It is 10% in all the three cases. Either it is interest, dividend, or rent, it is 10%. But when it comes to so it is when ultimately when tax liability in the hands of unit holders, then it is then they have to pay as per normal tax liability, normal tax rates. Okay, so this is clear. Resident part is clear. Now coming to non-resident, remember the sequence. First is interest, dividend, and then comes the rent. Okay, 5% in case of interest, that is TDS, and 10% in case of dividend, and then rate in force in case of rent. At present it is 30 plus 4%. Okay, now ultimately when it comes to the unit holders, what is the tax slab? At what rate that person is liable to pay tax? In case of non-residents, no, it is 5%. Here also 5%. Ultimate in the hands of unit holders, it is liable to be taxed at the rate 5%, and here also it is 10%. But when it comes to rent, he has to pay as per normal tax rates. I hope this is clear now. uh, yeah, just revise it one or two times. This rates are very important, and definitely he can give, ICA can ask us in MCQs as well, so we have to be ready to answer this. Okay, but when it comes to dividend, there is a catch. Okay, now you have to see in case of dividend, you have to see at what rate this SPV is paying tax. If it is paying tax as per 115 BA, that is 22% tax, then in that case, no, whatever amount that the unit holder is receiving is taxable. If SPV pays tax as per normal tax rates, okay, for residents it is 30%, and for the non-resident it is 40%. So in that case, no, whatever dividend that is received by unit holders is exempt. So if he pays tax at the rate 22%, then it is chargeable to tax. Then that dividend amount received by unit holders is taxable. Okay, I hope this is clear. So there is only one catch in case of dividend that you need to ask yourself in the exam hall whenever you get a question. So you have to see at what rate this SPV has paid tax. Okay, so you need to see at what rate the SPV has paid tax. If it has paid tax under section 115 BAA, where the tax rate is 22%, then the unit holder is liable to pay tax. Okay, if this one pays tax as per normal tax rates, then the dividend amount received by unit holders is exempt. Okay, I'm only talking about dividend here. Okay, I hope this is clear. Okay, moving on. Okay, so till now we have discussed about three kinds of incomes, that is dividend, interest, and rent. What if this business trust is earning any other income? Okay, so there are certain kinds of rates that are given, all other incomes in case of business trust. So if it is a long-term capital gain, then 20%. Short-term capital gain under section 111A, then it is 15%. And then any other income, then it is maximum marginal rate, that is 42.77% for any other income. Okay, so all the other income is taxable in the hands of business trust. I hope you understand. Only three incomes are taxable in the hands of unit holders, which are exempt in the hands of business trust. Okay, rest all other incomes are taxable in the hands of business trust and are exempt in the hands of unit holders. Okay, so in this chapter you need to give more importance to these three incomes: interest and dividend and rent. Okay, any other income, normally long-term capital gains will be chargeable to tax at the rate 20%, that we know. If it is a short-term capital gain under section 111A, it is 15%. And then any other income, this is a tricky point, which is chargeable to tax at the rate MMR. Okay, so I hope this is clear. Now there is a unit holder. Okay, imagine there is a unit holder and he has transferred his units. Okay, so in case of a unit holder, if he transfers his units in business trust, then you will have to see whether that is listed in a recognized stock exchange. If it is listed, then what is the period of holding? If the period of holding is more than 36 months, then it will be treated as long-term capital gain. If the period of holding is less than 36 months, then that becomes a short-term capital gain. So for short-term capital gain, the tax rate is 15%, and for long-term capital gain, it will be chargeable to tax under section 112A, where up to 1 lakh you get exemption, and over and above 1 lakh it will be chargeable to tax at the rate 10%. Right. So here the special point here is it is 36 months in this case. Okay. If the period of holding is more than 36 months, then that becomes a long-term capital gain. If it is less, then it becomes a short-term capital gain. So what if the business that units are not recognized, that is not listed in recognized stock exchange, then long-term capital gain 20%, short-term capital gain normal tax rates. Okay, so this is chargeable to tax in the hands of unit holder, because unit holder is the person who's transferring those units, right? So units in business trust, so unit holder is liable to tax here in this case. So these are the rates that are applicable to unit holders. Okay, once again I'll repeat. So if it is listed in recognized stock exchange, then if it's a long term, that is more than 36 months period of holding, then it becomes a long term. Then that will, then 112A section is applicable, where up to 1 lakh exemption is given, more than 1 lakh 10% tax is applicable. Okay, if it is a short term, then taxable at the rate 15%, right, under section 111A. Okay, this is a new section which is inserted by Nirmala Sitharaman. So if you see, there are three kinds of incomes that we have spoke: interest, dividend, and then rent. So interest, dividend, and rent is actually covered, but sometimes what was happening is, business trust is paying to unit holders as a repayment of loan or repayment of debt. So in that case, it is neither taxed in the hands of business trust nor it is taxed in the hands of unit holders. Okay, so Nirmala Sitharaman has brought even that also as a fourth income, and then said that unit holders are liable to be taxed whenever the repayment is done. So from such repayment, right, you have to remove the cost of acquisition. So whatever amount is received by unit holders, reduce whatever the cost of payment that is done at the time of purchasing those units or giving the loan or debt. So you have to remove that cost of acquisition, and on the balance amount, it would be chargeable in the hands of unit holders. So this is the latest one, which got amended in the last year in 2023, right? So yeah, that's it about business trust, and I hope you like this video. So please do share it with your friends and like this video. That is like a motivation for me to keep going forward. And thank you so much, and please subscribe for more videos like this. Thank you.